up in the morning, about 8:45. Get home in the evening, too tired to take time to give me the loving I've been waiting for all day. You're always too tired to even.
And we're back here in the Queen's Grapevine, of course, talking to my special guest, Valerio, a professional accountant, right here in the tri-state area. And we're talking a little bit about tax preparation, and we're talking a little bit about the long form and the short form. We are very privileged to have him on our program, and he's talked about a couple of things that I think is very, very important. He talked a little bit about character and integrity in the preparation that he does when he does these forms, and also you, as a viewing audience, your integrity with information that you give him and what you present into the artist, what I think are very key components of preparation and key components of what Uncle Sam get and information you get. Jose, when we talk a little bit about long form, let's say a guy has a company, right, and he also has an investment property and his own property. Should he do the long form and do a Schedule C showing what his income the company made, or should you do a separate form for the company itself?
It all depends on the structure of the company. If the company is a business, he's doing business, what is usually called a DBA,
doing business,
then he has to file the Schedule C. If the company is a corporation, then he has to file Form 1120. So, I mean, it's automatic. Now, sometimes when you have an LLC or a partnership, you can opt to do the to pass the information through your own returns and do the Schedule C for those companies, for the LLC or for the partnership. But if you, it all depends on the structure of the business to file the Schedule C. Now, the Schedule A, you have your standard deductions. You have your medical deductions. You have the deductions for the taxes that you pay to the state, which incidentally, New York is the highest, in the country. So yes, when you file the loan form, you benefit a great deal by living in New York because you're able to deduct the taxes that you pay to the state and to the city. And you have your donations also, for which you need canceled checks or actual receipts. A lot of people say, "Oh, I donated whatever." Show me the proof, okay? Because it's very easy to say, "I donated $1,000," but when the government goes after you and you don't have any proof, then they're going to disallow the deduction. And then you have your standard, non-employee compensations and what have you. So the loan form is really beneficial, but again, it's only beneficial for those individuals who, have these deductions to take. Sometimes the standard deduction is higher than all of these deductions, so it doesn't make sense for you to file the loan form. You can just take the standard deduction and not do anything with the Schedule A.
How do you handle a situation when you inherit a new client who does a long form, and on the Schedule C, he has a loss carried forward for years? Do you require proof of what this loss is all about?
I sometimes do. I would have to look what he filed the year before, and if I see that there's a loss carried forward, then I would take it from there. I want to know, how. Most clients don't even know that is. So, I really don't come across a lot of clients with that type of situation. But
unless you're sophisticated in a lot of business.
That's right. That's right. Usually they come in with, S corporations or 1120s, and then we have to deal with, how they derive their income, either 1099s, or are they on salaries, or, are they consultants, so that's usually what I encounter the most when I'm in this field of accounting.
Let's talk a little bit about non-for-profit. There are quite a few people who start up a non-for-profit not understanding the impact and implication of a non-for-profit. Would you be kind enough to tell our viewers just exactly what is a non-for-profit company and the implication and the expectation?
Well, I'm glad you asked this question because I have a lot of experience in non-profit. I worked for a non-profit for close to 20 years. I was their controller. Wow. So I used to deal with all the auditors who came in. A non-profit organization is basically what what it says. You're not motivated by profit. When you have a business, you're motivated by profit, even if you have a loss. But the intention of a business is to make a profit. When you have a nonprofit organization, you're not going to show a profit at the end of the year. What you're going to show is a fund balance. There are certain types of nonprofit organizations where they require that you spend all the money that you get for the year, so you're not accumulating assets on the nonprofit organizations. For instance, the organization that I used to work for, we had to provide a budget, and every year we had to spend all the money on on the revenues that came in, so we wouldn't build any fund balance, so to speak. There's a certain way that a nonprofit can do that, but it's a little more complicated, which we're not going to get
require
into.
time.
Right, but basically, nonprofit organization is under a lot of scrutiny now by Uncle Sam, because they want to make sure that if you create a nonprofit, that you don't have an ulterior motive behind that nonprofit. Okay, so they are very stringent. They're making nonprofit now report a lot more than they used to.
And they watch closely now.
The nonprofit has to prepare every year. At the end of the fiscal year, you can choose any fiscal year that you want. It could be calendar, or it could be fiscal year. You have to report all the activities on form which is called 990. And that 990 is available to anybody who goes into your office and requests a copy of it. Okay, so if you're going to do a nonprofit to hide from...
Look out.
Forget it, because if you own a nonprofit and I want to know how much money you've been paid, I'm going over to your office and I'm going to request a copy of the 990.
It's public record.
It's public record. The Freedom of Information Act will give you so even if you don't want to provide it, all I have to do is call the government, the Attorney General, and they will force you to provide me with a copy of the 990. So with the 990, you will be able to know who are the highest paid employees of that organization and where you're getting your revenues from. Either your grants, your donations, or whatever. It should all be detailed at the with the nonprofit. And if you have a nonprofit, the first year, if your revenues are between $1 and $25,000, you don't have to do an audited financial statement. You can do a basic review. If you income is between $25,000 and $75,000, the government requests that you do a compilation, not an audit. Now, anytime your revenues go over $75,000, you have to do an audit, because they want to make sure that people are not putting money into their pockets. They want to make sure that that nonprofit is adhering to all the regulations that the government
are required.
Get up in the